Hello everyone, guess what? Today we have an amazing piece of news, which is people are not anticipating as to what is about to happen, in my personal humble opinion. So watch this video till the end. It is absolutely incredible. So we had two amazing pieces of news. First of all, let's just jump straight to the screen here. Germany is basically almost out of Bitcoin. They have like 4,000 coins left. So basically, that's like nothing. So this fear is out of the way. Yeah, maybe one last piece they will dump today, which is Friday. So on Happy Friday, by the way. So that's about it. So this fear is gone. But the amazing thing, the best thing yet is this right here. CPI came out yesterday. The forecast was 3.0. It came in at 3.0. Which is freaking amazing. I was really hoping for this because if it would have come out like 3.4, it would have been horrible. So it is very good, very good. And this actually is what has affected the probabilities of our first rate cut in September. And right here, look, the rate cut in September is currently sitting at a probability of 86%. So very, very likely that either in September or the next meeting, which is going to be November, we're going to see the first rate cut. And this is when the first crazy parabolic moves, in my opinion, will begin, which will coincide also with elections. But if you look at the chart, and you will be right if you're going to say, okay, Thomas, if it's all so great, why are we dumping? NASDAQ is dumping. S&P 500 is dumping, has dumped a bit, well, at least a bit. And the same thing in Bitcoin. We kind of, we pumped on the news. We actually broke them. Let's go to the daily chart. We actually kind of retested / broke the 200 moving average in the daily, which I told you, which is very important. But then we retrace, and the same thing here in Ethereum. Look at it. We are squeezing it so hard. Ethereum went to like 3,200, and my trade on ETH actually broke a profit finally, and I was like, wee, until, well, it turned again. But at least we're not crashing like crazy. And I think that there is a reason why this happened, and actually is spelling out as to what is about to happen as well down the road. And guys, quickly before I tell you what it is, remember about Bybit, from what I understand, they're going to be ending and reducing the bonuses. So if you're going to be trading it somewhere anyway, then use my link down in the description of this video, and you will be able to get up to 42% discount on trading fees if you trade with more than $100,000. So if you're a whale, you will save thousands of dollars on commissions if you use my link down in the description of this video. And also, if you're a smaller trader, you can still claim up to $30,000 initial deposit bonuses depending on how much you deposit. All the rules, everything is you can see once you use my link down in the description of this video, and other bonuses as well, which you can pause the screen and take a look at. And certainly if you already have a Bybit account, and I recommend you can create a new one using my link. You just can use a different form of identification, such as a driver's license. So anyway, let's move on. And then what has caused this? And I have a theory for what is happening right now. And then at the end of the video, I'm going to also tell you whether we're going lower, whether it's going to actually get worse before it gets better. So we'll get to it. So this is juicy video. What I'm seeing right now is it's all coming together. So I think that the issue and the reason why we have dumped in Bitcoin and ETH and we didn't go parabolic, it's actually stemming this time from NASDAQ and from just traditional markets. Because right now, a lot of people are calling for a crash in the S&P 500, which a lot of people are saying, oh, look at the price, it's crazy, it's parabolic, all these tech stocks, they have to cool off, blah, blah, blah. Which, if you look at this, they are kind of right because the S&P 500 looks ridiculous. I mean, look at NASDAQ. I mean, go to the weekly chart. I mean, it's ridiculous. Just zoom out. It's ridiculous. But there is something you need to understand about this. And unfortunately, Michael Burry, he was the one shorting this whole fucking thing the entire time. And he still is, I suppose. And I think he's going to regret this. But let me explain why. Because this is the round pole type of a talk, but I agree with him. So historically, so this is the FUD right now. Historically, when the Fed cuts rates, which again, because of good inflation reading, it could be coming in September. And usually, historically, this is when the market crashes and goes into a recession, when the Fed finally pivots. Is it historically the case? And the answer is yes, it is historically the case. Not always, but often. And I think that this is what is spooking the market, and the crypto, as being the highest risk asset right now, is kind of following and leading the path, you could say. So, and at least it's not pumping like crazy. And we're seeing a lot of these right now, especially on Twitter, SPX monthly. We have this resistance right here. Look, this was, this was the recession. This is the dot-com bubble, I believe. Then we had the 30s, this huge crash, which was the depression. Then we also had this in 2008, and every time we touched it, this was the end. So like people are trying, and right now we are actually touching this trend line again, right here, right now, which a lot of people are saying, oh, this is not a coincidence, we're gonna dump. So there's a lot of negativity, and so it's kind of positive that the inflation is going down, but at the same time, people kind of have this reflex that once Fed pivots, it's actually is when the shit hits the fan. And the same thing here, this chart can give us a very good, clear indication where gold, silver, commodities, and stock markets like SPX are likely to be heading, which is down and like a lot of FUD, really. But what you need to understand, is this the case? And historically, it was the case. But this time, we have a slightly different situation from previous times because of liquidity, because of money printing. And this just brings me back to the chart of the SPX of our NASDAQ. Why is it pumping like crazy like this? Well, for one, it is actually being run by just a couple of tech stocks, and the rest of the stuff is not doing anything, or like is slow or sluggish, or actually is dumping. So it's not looking as good as the tech sector. And this is what is actually pulling the entire US market right now. But the thing, what you look at in terms of indexes, well, number one, quarterly, they kick out non-performers and they actually put in the performance. That shows us how index works. That's why it's an unlosable battle unless you get in at the highest prices possible. And the second thing, guys, is money. Of course, it's going to go parabolic throughout, even for the next hundreds of years. It's going to keep going up and up and up. It's going to always be diagonal up move overall. Why? Because they're going to keep printing money. This money is going to be diluting the supply, and certainly it's going to be going where exactly? Into the markets. So people are saying, oh, just because the price is so high, it has to come down. No, unfortunately, it doesn't. And this is something I've learned the hard way myself. When the money flows, and there's going to be a shit ton of money flowing, and right now we have elections, and so many things happening in terms of liquidity and the M2 money supply twisting. So these fears, I think they're just baseless at this point, considering the liquidity. Because if you look at 71, 2001, 1930, we didn't have this crazy money printing. We didn't have so much money on the sidelines that is ready to buy the fucking dip if it comes to it. There's so much money, it's ridiculous. So that's why we have this crazy liquidity support. And besides this, besides the election year, they're not going to let the markets crash. Like, it could correct a little bit. Yeah, it could be some stagnation, slow market. Sure, but they're not going to let it crash because of the election time. They never let it crash during their elections. Study the cycles, please. And also, it's rare, but S&P has gained nearly 17% through the first 130 days of trading of 2024. And when up between 15 and 20% year to date, in post-World War II era, SPX average gain the rest of the year, when it has done so well, for the rest of the year, it on average is still performing well. So meaning the trend is your friend. And yeah, it can look crazy. And that's why Michael Burry has been shorting S&P 500 since like what? He's been shorting it, I think, since 4,500, and look, it's at 5,500. So, and it could keep going up. Like, it can correct a little bit and then keep going up and up and up because of all the things I just mentioned. So, rather than just keep sitting there and saying, oh, it's going to end at some point, ride the wave. This is what I'm going to be doing. So, certainly we can have some corrections as we go, and that's why it brings me to the topic of whether we're going to see a correction now, the last big dip before we actually move to the upside. And quite frankly, guys, it is in the cards. I mean, it's indecisive right now. We want to see what is going to happen in the next few days, but overall, the weekend's probably is going to be very boring. But next week, if there is going to be a dip, it could be a manipulative one last fear, one last something. It could be even deep, but that would be it. So in my opinion, the sell exhaustion and everything I mentioned in the previous video, I'm going to link it up here. Check it out. It's very important data for you to have context as to what is happening right now. If there would be a dip, in my opinion, it would be the last one, because the exhaustion is crazy. The interest is crazy. What is happening is crazy. The accumulation is crazy. Everything is pretty crazy. And considering the amount of liquidity on the sidelines and the amount of liquidity is going to be coming into the market, this here is just outdated, in my opinion, quite frankly. So we need to survive, as I said before. Let me just summarize. We need to survive a few more weeks, maybe a month. We have to go into the fall. We have to see the first rate cut. Done. unless we go, unless unemployment spikes, suddenly we go into recession. Okay, that could be another like kind of a black swan, but that's a smaller probability for the time being, considering the speed at which the inflation is moving down. So let me know what you guys think down in the comments, and check out this quick tutorial as to how to trade Bitcoin with proper risk and money management. Remember about all the bonuses for the whales on Bybit, and not just for the whales, using my link down in the description. And as always, peace and love, times Crollo. Stay smart, stay very rich, and I'll see you next video. Bye-bye.